The US is pursuing another oil tanker off the coast of Venezuela, so what could that mean for oil markets? The US Coast Guard has told Reuters it's pursuing what it says is a sanctioned oil tanker in international waters off Venezuela. If that is seized, it would be the third in less than 2 weeks. It comes after the US said last week it would impose a blockade on all sanctioned tankers entering or leaving Venezuela. Well, Russ Mould is investment director at AJ Bell. Russ, last week it didn't seem clear whether or how the US might enforce this blockade. It does now seem that it is serious. What does that mean then for oil markets?
I mean, the oil price has had a terrible 2025. It peaked north of $80 early in this year and has basically ground lower ever since. So it dipped below $60 a barrel earlier last week and has just drawn a little bit of support from this geopolitical turmoil. I guess we're coming into the Christmas season. Volumes might be thin. Traders won't want to run long big positions either way. So it's creating certainly a few ripples at least.
Can it easily be replaced, though, by oil from elsewhere? The main customer for this sanctioned oil is China, which has other suppliers, doesn't it?
It does. I mean, China hasn't, as far as I can tell, been shy about buying sanctioned oil from, say, Russia, for example. And Venezuela is less than 1% of global output. It's also heavy, sweet crude, needs a lot of refining. So it isn't by any means a huge loss to the global oil market when on the face of it, the International Energy Agency continue to reinforce their message that there seems to be plenty of supply around.
Is the market expecting such a large glut of oil next year, at least according to the IEA, that geopolitics will have less and less impact?
I mean, there wasn't much of a geopolitical premium in oil this year when we had ongoing war in the Middle East, we had war in Eastern Europe, and although we've hopefully reached some kind of settlement in one, or maybe inching our way towards a settlement in the other, that again you would expect will perhaps take a little bit of steam out of the global oil price. So again, if the IEA's numbers are correct, and even if economic growth just jogs along, it doesn't seem like a fantastically strong picture for oil right now. No, given that there does seem to be more than enough supply out there.
Elsewhere, Russ, the market seems fairly positive this morning going into Christmas week, but we haven't seen the Santa rally of previous Decembers, have we?
No, we haven't. I mean, it's been a fantastic year. I mean, you've had double-digit percentage gains from most major equity markets that you can think of. Bonds have provided a positive total return. Commodities have in dollars. So it's really been a pretty good year. I guess, maybe people just worried it's expecting too much. You get a second year in a row of the Goldilocks scenario of cooling inflation, steady growth and falling interest rates. But at the moment, that is the consensus view. I guess everybody's probably on their toes just because we've had such a good year this year, I should think. But again, weak oil certainly at least plays into the cooler inflation narrative, if nothing else.
There is still some key data to come out this week. We've got US GDP in particular. What do traders want to see in their stockings?
Yeah, I mean, the US GDP number, I think the Atlanta Fed GDP nowcast is something like 3.6, 3.7% growth for the third quarter. Very, very, really pretty healthy. Maybe doesn't necessarily encourage the Federal Reserve to cut interest rates too much next year. But again, certainly no sign of a recession. But again, that is a backward-looking number. And clearly what's going to be much more important is what comes out in 2026.
That was Russ Mould of AJ Bell. Don't forget, you can watch more videos on Reuters.com.